Hey everyone, this is a Facebook market update from the Financial Reboot investment team. So it was a wacky Wednesday today. You can see with the S&P, it gapped down at the beginning. Started to the buyers started to come in. It was looking like it was going to try that 2100 level again. It never quite held it. Started selling off just a little bit after them, maybe in a hour after the opening, kind of flatlined, and then as we got closer to the Fed announcement, it sold down a little bit. Then it really sold off and it recovered. The technical problem here is, yeah, it started to recover, but it was never able to take out that 2105. Um, it's just really, really a lot of resistance out there, and it sold off in the end. That means people don't want to carry bets overnight. With the way the news stream is right now, with the news flow, anything can happen in this market, and people just don't want to leave money out on the table. And we were the same way. We cashed in those spider puts we talked about last week. Um, Nice tidy profit on that. We're not worried about leaving any money on the table, because what if we get a relief rally and stuff? We just didn't want to jeopardize those profits. What we did was we held on to the UVXY. Um, that we just bought the stock. It's already up. What, a good $4 or $5 from where we bought it, and it looks to be going up even more after hours. It was up to even $19. So that's how we played this. We sold the options to protect the profit, because options have an expiration date. If you give those profits back, you're never going to get them back. We kept the UVXY because that one we bought the raw stock, and that we can keep for a while and not have to worry about any expirations, losing value, or anything like that. But it's already a big winner, so we're going to stick with that. We'll look to add, maybe get back in the S&P short. What we're really going to look at tomorrow is going short on the Nasdaq. The Nasdaq, you can see the news over here. Facebook shares fall 7%. Really good earnings report, but guidance, again, guidance. That's what the market trades on, their forward value. They lowered their projections for ad revenue. They said it's going to be a tougher environment. What happened is, when these companies like Facebook, they have 3 or 4 really stellar quarters in a row. Well, guess what? The following year, they're going to have to go up against those quarters as far as progress goes, and it's going to be tough for them to beat these past quarters, especially in this environment. 1 billion users, though, it's still a powerful company. So, we take a look at the S&P chart. Like we said, we started moving up after we gapped down, but then we took another level down. We held that for a while. It looked like we were going to hold that, but as we got closer to the Fed announcement, which the Fed announced that they're going to hold rates steady, but now this brings the December rate hike into the picture. It sold down, recovered, but again, the technical problem here is it sold off at the end. People don't want to carry bets. Nasdaq, same thing. Started to try to go green, flatlined. With the Fed announcement, it kind of dipped, tried to recover, and sold off at the end. Facebook is not going to help tomorrow. So we'll look to probably maybe play some Nasdaq puts. The FANG stocks are really taking it hard. Really, only Google had a good earnings report. Amazon was a dud. Facebook's a dud now. So we just want to watch out for those high flyers. And, remember, I believe the last time I saw information on it, the FANG stocks have been responsible for about 60% of this bull market. So if they start dropping, the market's going to start dropping. You want to start shorting those indexes. Oil had another bad day. It was down, as you can see. It was a really long day for the oil bears or bulls, but it started to recover a little bit after hours. Settled down today at just about 3% down. If you remember, just a few days ago, we were up over 51%. That's where we shorted it. We cashed in our shorts yesterday, though. We just didn't want to leave any. They were options, so we didn't want to leave any money off the table, take any chances. Maybe OPEC makes an announcement. Again, this is why people aren't carrying plays very long. The news cycle is just very dangerous right now. That's just another danger to your profits, to your portfolio, and you want to keep an eye on that. Oil, no different. So we're not even in oil right now. We'll analyze that later. We'll see how it settles. Gold had a great day. All you gold Bulls. Congratulations. You know, you guys took a shot over 1300. You're definitely holding over that 1275 level, which is very positive. But unfortunately, you couldn't hold the $1,300 level. What happens is, yeah, you got what you wanted today with no rate hike, but December is looking like a rate hike, and that'll put pressure on gold. We are debating right now whether to go short gold. It's had a nice little run, but it might be too much of a run, just like oil, based on really what? Really, what is this run up based on? Every good run that turns into a long bull trend has to have a catalyst, and we just don't see the catalyst for gold right now. This might just be relief buying. This just might be people cashing out shorts, maybe a little squeeze there, but we're not convinced until maybe if it holds that $1,300 level for a couple of days, we'll take a bullish look at it. But right now, we're still bearish leaning. So that was your update for the markets today, Wednesday. Sorry, we were a couple days that we didn't put out any market updates. It's been really, really busy. A lot of things going on with Financial Reboot. You know, we thank you for all your support, all the page likes. Keep tuning in. We'll be more consistent from now on. Uh, Other than that, have a great afternoon. Aloha.